Most traders only look at the big names like Apple, Tesla, SPY, but I'm about to show you 3 untapped niches where traders are quietly making $100 a day. No hype, no crazy risks. I've been trading full-time for years, and these setups, they're part of my go-to playbook. When I want consistent, low-stress profits, the best part about this is I'm breaking them down for you in under 7 minutes here, so you can start spotting these opportunities right away. Let's dive in. Niche number 1, earnings drift plays. You don't have to trade on earnings days. In fact, that's often when the market is most chaotic. The real opportunities is in what happens after a strong earning report. When a company beats earnings and raises its guidance, institutions tend to buy it in gradually, and that's create a slow and steady uptrend, known as an earning drift. The method here is 1. You want to filter the stock that beats earnings and guide higher. 2. You want to watch for a clean consolidations or a pullback. And 3. You want to enter as the stock begins a steady climb, confirming with its rising volume. Now take a look at Johnson & Johnson for example here. Ticker symbol J&J. After a great earning report, the profits and the guidance looks fantastic. Institutional buyers came in and purchased the stock right at the buy zone on a weekly time frame. And the results? The stock begins a steady climb here, then break out, then hit that weekly sell zone within a month or so. This works because institutional buying often take days, weeks, and not minutes. It rewards the patience and then planning instead of chasing volatility. You're riding a continuation pattern that's backed by a real momentum here. Niche number 2, sector sympathy runners. When a major stock in a sector breaks out, like a big AI or biotech names, it often pulls other stocks in the same space with it. These are called sympathy plays. Most retail traders chase the leader of the pack, but in my opinion, the smarter approach is to track the sympathy names with better risk rewards. Here's how. 1. You want to build a watch list grouped by a sector here. It could be AI, it could be EV, it could be biotech, etc. 2. You want to use the alert or scanners to catch the sector momentum early. And 3. You want to enter the sympathy plays that show delay confirmation, usually 5 to 15 minutes after the leader. For example, remember the AI bull run from last year leading by NVIDIA when the stock jumped from $50 a share to $150 a share? That's a 300% gain in 1 year. And you might think, great, that's a lot of money, right? What if I told you? Using the sympathy play, don't trade the leader of the pack. Trade a stock like Super Microcomputer, ticker symbol SMCI. You can average the same return 300 to 400% gain in less than 3 months. We're talking taking the same amount of growth in way less time here. The same sector, because you pick the smaller company of the pack and invest in its higher potential. This strategy gives you a cleaner entry and often more manageable volatility. Plus, you're trading off the same sentiment, just without the crowd. Niche number 3, morning momentum play. Just because the market opened at 8:30 Central Time, it doesn't mean that trading opportunities have to start at the market open. In fact, some of the cleanest spikes happen 30 minutes before the market open. Here's the play. 1. You want to set up a scanner for stocks within the SP 500 that moves at least $10 a share and trade with at least $1 million in volume before the market open. Typically, I do this about an hour before the market open. 2. When a legit momentum swing happens, look for a volume surge and fast price movement. 3. Target quick moves in the first few candles, often with defined risks. Often I trade within the 5-minute charts or even the 15-minute charts. I take half of the profits within the same day and let the other runners run into the end of the week. Look at Tesla for example. So I found it on a scanner before the market opened. As you can see here, 5 million volumes have already been traded 45 minutes before the market opened. Top 2 on the list. And the results? At market open, This stock jumped like a rocket into the upside and giving me an opportunity to cash in profits right away. Trade works because there's less competitions, there's less algorithms, and before the market sessions even open. If you're quick, you can catch these explosive moves before the crowd even sees the headlines. If these setups are clicking with you, I often break it all down here with my students. Scanning tools, chart patterns, and risk management plan inside of my course called Exit for Profit. This is where we turn strategy into results. Hit the link on the description below if you're ready to take the next step. So, the 3 untapped niches: steady swing plays, fast intraday runners, and before the market open play. All of them are capable of $100 a day if you just focus on these high quality setups others may overlook. Which one are you most excited to try? Drop in the comments below and hit that subscribe button if you want more strategy like this. This is Vu with the Family Trader. Trade with the insight and not with the crowd, you guys. See you next time.